Hello, and thank you for joining us for today's discussion on the insurance industry. I'm Kevin Orland, and I cover Canadian banks and insurers for Bloomberg News. With me today are Leigh Chalmers, Senior Vice President, Head of Corporate Finance and Capital Management for Sun Life Financial, and Halina Hagen, Global Treasurer and Head of Capital Management for Manulife Financial. Welcome to you both. So at the start of the summer, it looked like the accelerating vaccination programs would have allowed a full reopening of the economy by now. However, vaccine resistance and the spread of the Delta variant have prevented that. So, how is the prolonged nature of the pandemic affecting your businesses? We'll start with Leigh on that one.
Well, thanks, Kevin, and thanks for having me. It's great to be back. It's hard to believe it's been a year since we had this conversation, and who would have thought we'd still be working from home 18 months later? So it's great to be here, and it's great to see Halina again. I guess what I wanted to do was talk a little bit about sort of how our business has been impacted by COVID. So sort of going back to the beginning and really touch upon a few aspects of it. Starting with our clients, maybe touch a little bit upon digital and how that's really changed our business. Looking at the performance of our business, and then lastly, on our people, because obviously we've all had a big shift as we've been adjusting to this pandemic. So maybe starting with the clients. Obviously, clients are at the center of our strategy. Everything we do revolves around the client, thinking about how do we serve our clients. So, as we entered into this pandemic, we were already shifting to using more digital tools, but the adoption rate wasn't really there. Right? People weren't really willing to go out and talk to their advisors remotely, virtually. So we continue to see a big shift and being able to access our clients and having that open dialogue between our clients and our advisors. So I'd say that's been a big change. The other part of it, as we pivoted with the pandemic, it was really about getting the right products and services to our clients. We introduced automatic underwriting, which allowed us to continue with underwriting policies without having the lab work. So I think there was great traction there. The industry as a whole moved more to e-signatures. And I think the real push we did was around, those partnerships and, introducing virtual care. So making sure that our clients could continue to get the care they needed. And I have to say, 18 months in, I'm shocked at how many times, we've been online connecting with the doctors. My kids have to meet their doctor, so we're always online, and it's now really become part of sort of that regular health care and how we interact with our doctors. So I'd say from a client perspective, we've really pivoted, and that continues. And I'd say overall, the pandemic has really reinforced our purpose. So helping our clients access the care they need. So I think that's really sort of shone throughout the entire pandemic that we've been dealing with. On the digital front, I wanted to touch upon was really about, again, we had the digital tools rolled out. We've certainly continued to see the acceleration of, our advisors being enabled by digital tools. As we've gone through lockdowns, obviously it's gone through series of waves, across all our geographies we operate in. And the ability to access our clients remotely has allowed us to continue to push through those sales and access our clients and continue the funnel and the pipeline of our business. So I think that's been excellent. I would say as an organization, we're really focused on everything digital. So we refer to it as the digital enterprise. And I'd say the pandemic has allowed us to continue to accelerate that. We're investing in our tech stack. We're continuing looking at our client journeys. So I'd say more than ever, it's really important to make sure our clients are able to access and processing their claims is easily pushing through our applications. So I'd say from a digital side, we continue to see significant acceleration. And maybe just a couple proof points. In Canada, we have our digital coach, Ella, and Ella has connected, with members more than 3.4 million times. How we're seeing that flow through in our results is, we're seeing increased wealth deposits, just year to date, at Q2, we're at over 400 million in additional deposits as a result of those digital connections. Same with insurance coverages, over 600 million. And then I'd say in the US, we invested in a company, Maxwell Health, And that was a digital benefits platform. And as a result, through 2020, every single one of our enrollments were done virtually. So a real success. And I think if anything, the virtual enrollments demonstrated the value of that tool and allowed us actually to accelerate sales because of that. And then in Asia, I'd say the same thing.
All right.
So, yeah.
I'll continue.
Okay, I think those are the key points. I did want to touch upon, so the impact on our business, but maybe why don't I turn it to Halina? She can touch upon it, and then I can come back and maybe touch upon a few other things. I don't want to take up all the time.
Yeah. So Halina, how has the sort of prolonged nature of the pandemic been affecting Manulife?
So Manulife and the industry in general, if I may. So I think insurance companies in general proved quite resilient, both operationally and from a business perspective. And a lot had to do with the digital tools that we had at our disposal, and we already put them in place prior to the pandemic, but very similar to Sun Life's experience, the adoption rates were not as strong as we would like prior to the pandemic. Of course, the lockdowns, restrictions on physical distancing necessitated like the adoption of those tools, and we were very happy to see it, and we believe that this trend will continue. Like, for example, in Canada and Asia, 97% of our annualized premium equivalence is accessible to customers through the non-face-to-face solutions. We also have capabilities to accept digital claim submissions. We enhanced throughout 2020 our straight-through processing. And just like to prove like some, again, points regarding the digitization, in the US, 100% of the insurance contracts were delivered digitally at the end of 2020, compared to 20% before the pandemic. So a very rapid increase. And in Canada, the comparable numbers stood at 60% for the electronic delivery of insurance contracts in Q4 2020 relative to 40% prior to the pandemic. So a rapid increase. So I would say, like, when you think insurance and COVID-19, maybe the first adjective that should come to mind is resilience. The same was true about our staff. Literally overnight and with no hiccups, we moved to working from home. For Manulife, over 95% of our global workforce of over 37,000 staff, including Asia, has worked from home at some point during the pandemic, and currently 98% of our North American staff continues to work from home. So this resilience, combined with the fact that pandemic also increased awareness of benefits of protection, explains also our business results. I think in case of Manulife, another adjective that's critical is diverse. We have lots of diversification of our businesses. We are present in Canada, US, and in Asia. We are one of 3 Pan-Asian insurance companies. We operate in a very meaningful way in 13 markets across Asia. Asia already contributes 1/3 to core earnings of Manulife. We are also diversified between insurance and global wealth and asset management that contributes 1/4 to our earnings. And within global wealth and asset management, there is a diversification of lines between retirement, retail, and institutional. So this diversification, again, greatly contributed to the strong business results. We reported 5.9 billion net income in 2020. The year-to-date results, first half of 2021, stands at 3.4 billion. So I would say a very resilient and impressive performance from the insurance industry broadly, of course, including Manulife, my own company. I also, if I may, wanted to comment because on risks that were feared but didn't materialize. So I think there was a lot of anxiety when the pandemic struck regarding our business and the insurance claims. What was not appreciated enough and came through very strongly is diversification within our insurance risks between mortality and longevity, for example. Similarly, between certain business lines such as travel insurance and other business lines such as dental claims, etc., like that sort of tend to offset the impacts on the bottom line throughout the pandemic. So and in general, I don't think it was appreciated how well the mortality risk is managed within insurance, how we use the reinsurance risk mitigation tools to keep it under control. So these risks pertaining to pandemic, health, death, life insurance companies' problems, this did not materialize at all, I would say. And similarly, there was a lot of anxiety at the beginning of the pandemic pertaining to credit risk. And again, arguably partly through the support and action of central banks and access to credit, etc., but also in general, I think disciplined approach in the books of Manulife for sure, and insurers maybe more generally, we didn't see like widespread defaults that would hit the bottom line of insurance companies. Instead, like some other concerns emerged, like most notably concerning commercial real estate market, office and shopping malls and similar. So I just found it interesting how our perceptions at the onset of the pandemic were sort of modified by the events as they unfold. Thank you.
So Halina brings up an interesting point, which is that the pandemic really sort of altered a lot of the typical insurance claims and usage trends that people had seen previously, and also probably would have expected. These things changed in ways that people wouldn't have expected during the pandemic. So I was wondering, Leigh, if you could talk just a little bit about how Sun Life saw those claims and usage trends change during the pandemic, and is there any sign that some of those trends are returning back to normal, or have some of them been permanently altered?
Yeah, no, and I think that's a great question. And I mean, Halina touched a lot upon, about the benefits of the diversification of our businesses. So, I'd say Sun Life is the same. And I'd say not only it's about the diversification by products, but it's also the geographic diversification. So when the pandemic hit, it hit in Asia, and we sort of thought, great, we're a global company. It's just impacting our Asia business. But then, as it came to become a global pandemic, obviously, our entire businesses were impacted, but impacted at different times. So I think because of that diversification, we were managed to sort of weather through the storm. And so, like Halina said, sort of how our businesses interacted really allowed us to continue to perform and produce strong results. So in terms of trends we saw around insurance experience, I'd sort of start maybe with our U.S. business, where we have a stop-loss business that, because less people are using their benefits, we've had very, very strong performance. We also have a group life business that, of course, are having some implications as a result of mortality claims coming through, but overall, a strong result on our U.S. business. So you're seeing that diversification. I'd say in trends we're continuing to see. U.S. unfortunately varies state by state, varies depending on the level of vaccination rate. So again, we're seeing diversification across states, but we are seeing still lower usage around our stop-loss business. And we continue to see, particularly in Q2, we continue to see some life mortality claimings coming through, unfortunately. Turning to Canada, I would say, again, we didn't ever see significantly high mortality claims coming through. Again, that goes to the risk mitigation we have in place, whether it's the risk selection at the outset of who we're insuring, or also the use of reinsurance, as Halina had mentioned. So not being impacted significantly by life claims. We did see a lower usage of dental and health benefits. We are seeing that start to return back to sort of normalized pre-pandemic levels. And then on LTD claims, obviously that's something we're continuing to manage and monitor. And so maybe going to our last geography in Asia is unfortunately, with where they are in the pandemic, we, in Q2, by the end of Q2, we're seeing some geographies, China and Hong Kong starting to introduce lockdowns again. Vietnam was a country who fared very well through the process, and now unfortunately they're in lockdown, and so we're seeing some implication and headwinds coming through on our bank assurance sales as a result of the banks being closed. So again, varies geography by geography, but seeing some positive signs, and unfortunately some countries still sort of weathering through the pandemic.
Okay. So now over the past year, we've also seen interest rates rise. They're off their lows of the pandemic, but they are down from where they were at the sort of the start of this year. So I'm curious, how have those moves and some of the fluctuations we've seen in the yield curve affected your company's financing strategy? Let's start with Halina on that one.
So I have to say, generally, we when we entered the pandemic, we entered with strong capital levels and strong liquidity and very high quality asset portfolios, and I think this is true across the industry. However, the volatile markets that ensued, and especially the first few months of the pandemic, when I describe it that the markets in many ways lost their identity, and there was a great uncertainty with respect to the economic developments and the central bank's response, etc. It greatly affected my thinking horizon when it comes to pre-financing actions. Normally, we never like to be squeezed into the markets, so I say one transaction ahead of the markets, meaning you go where you don't quite yet need it, but just to optimize the size and the price. But we started thinking in the categories of up to 12 months of pre-financing. So macro uncertainty certainly made this approach prudent, and historically low costs made it very affordable. In fact, this allowed us to also choose the markets that we want to access. Manulife greatly diversified its funding sources. We are now very well established in 4 markets: in Canada, in the United States, in Singapore, and in Formosa, Taiwan. Through those 2 Asian markets, we have access to the Asian investor base and provide alignment with our presence on the continent there. So during the 2020 and 21 to date, we issued 6.3 billion in various markets and various instruments. We also redeemed close to 4.5 billion. So it wasn't only on a net basis, and given the preceding years where we largely leveraged, we are almost net. But still, it's been a very busy time to the Treasury. And the communication to stakeholders, including rating agencies, was critical throughout because of the timing difference between the issuance and the subsequent redemption that created spikes in the leverage ratio. For example, we issued in the Formosa market over $1 billion US in 40-year senior debt in September of 2020, but redeemed $1 billion in June of 2021 at 165 bips cheaper. Our issue, on a net basis, our issuance was relative to the redemption, saving us $12 million in interest rate expenses annually. In general, our net weighted cost of debt since 2016 decreased by almost 100 basis points, which is like a very high number. Some of it is, of course, the natural decrease in risk-free rates that we experienced and spreads tightening, etc. But it's also like sort of, this being on the ball, taking advantage of how various markets opened in different times with cost advantage really allowed to benefit from those opportunities. I also have to say that throughout 2020, the Canadian market, home market, was very attractive. And this was apparent not only to us, but also to foreign issuers that came to the Canadian market. So altogether, notwithstanding the uncertainties, once like you adopt this proactive approach and sort of look for opportunities ahead of needs, it has been a busy but quite an orderly process, I would say. Right now, where I stand, there is still a great deal of uncertainty, not so much as a year ago, because now we have a track record of the coordinated, determined response from central banks that support the numbers of the markets. But I still would think it's prudent to sort of think very proactively about the financing needs.
Okay. And then Leigh, how has Sun Life's financing strategy been in response to those interest rate changes? And what is the company's strategy looking forward to?
Yeah, I guess I would say, similar to what Halina said, I mean, we've never been, we've been in a low interest rate environment for a long time. So it certainly wasn't the low interest rate environment that would cause us to go out and do additional financing or pre-funding. But like Halina said, when the pandemic hit, we really looked at the opportunity to look farther out. So what were those for the next 12 months, what would we want to pre-finance? So we also looked at the market and took advantage of those low rates. So again, did a $1 billion issuance in May of 2020, followed that in 2020 with another $750 million, some of that being pre-financing and some of it just opportunistically taking advantage of the market. And maybe just one thing to add is, I think Manulife took advantage of it as well, but the new LRCN instruments that were issued, that gave us an opportunity to look at sort of our capital structure and reduce our capital funding. And we launched an LRCN of $1 billion in June, which allowed us again to save, approximately $9 million a year in financing costs. So a real opportunity to look at our structure. And again, we'll continue to do that as we move forward and manage and monitor the capital markets and the pandemic.
All right. And then just briefly, I know, both your companies have been active in this space, but we've seen the global green bond market and sustainable financing really move up companies' priority lists. I was just wondering if you could talk a little bit about how your company is approaching the sustainable finance. Let's start with Leigh on that one.
Yeah, so obviously we launched our sustainability bond framework now a couple of years ago and issued a sustainable bond right after. I think that's something that continues to be a priority. I mean, for us, ESG is a real focus for our investing portfolio. We've come out and said that we're committed to an additional $20 billion in sustainable investments within 5 years. So that's a huge commitment we've made. Sustainability is a priority for our new CEO, Kevin Strain, has announced that and announced a new chief sustainability officer. So I think, it's certainly something we're going to continue to monitor and manage and look to do that at the right opportunity.
All right. And Halina?
So yeah, we are very keen on the green or sustainable market. You may know that Manulife was the first global life insurance company that issued a green bond in 2017 in Singapore, actually, followed by the second global issue of the green bond in Canada in a sub-debt form. We have like $40 billion of undeniably green assets on our balance sheet already. In terms of renewable energy, we were involved in commercial solar and wind farms since late 1990s because it just made sense for our long-term business and returns. Our real estate is over 80% green certified, etc. And we are the largest institutional timberland manager with managing 5.4 million acres of timberland around the globe. So certainly, and we add to this portfolio in a like sort of natural way, $1 billion per year. So certainly a lot of opportunities for green or sustainable financing. We also have investments in education and social housing and similar. We have not issued since then, since 2018, the green bond. And why? I am very hesitant to issue anything against a maturity that's longer than 10 years. The market is changing fast, changing regulations, changing disclosure requirements, reputation risks, measurement, etc. So as such, like going longer than 10 years seems a bit sort of extending these risks too much into the future. And to Leigh's point, yes, we did issue $2 billion of RCN in February 21, but because it's a 60-year non-call 5 instrument, we didn't make it green. And similarly with our Formosa bond. I have to say there was an interesting dynamic earlier in the pandemic. We did issue in US senior debt that would be more than suitable to be in a sustainable form, but we refrained from doing so based on the advice from the banks at the time that there was so much uncertainty and volatility in the markets, like measured by hours almost, not just days, that issuing in a green format back then would create a one-day delay in terms of marketing and explaining the structure to the investors, and we wouldn't benefit in terms of any break on the issuance costs from this. So we didn't. And I am just amazed how much the market changed since then, how many of insurance companies, but also other companies now have sustainability frameworks in place and came to the markets with sustainable or green financing. So I'm quite sure this advice would be very different today, even in the under the conditions of high market uncertainty. I also have to say, because sometimes I'm asked, like, how about sustainability-linked bonds? And again, like when I look at this whole market, the key risk in some ways is reputation and measurement and disclosure. So to me, like the sustainability linked bonds add to this risk in the sense that now there is a KPI that the investors and the issuer have to agree how to measure if the investor is to get like a better coupon after a certain time period based on the performance against the commitments of the issuer or not. So to me, it sort of adds to this risk. So for companies like this reputation risk, so for companies like ours who have such big balance sheets and so many assets that clearly fall within the category of sustainable, like just issuing in that format, green format, sustainable format, seems like a good outcome. To take a stand on our support for the sustainability agenda, and at the same time to mitigate those reputation and disclosure risks.